Welcome to the Sutton Coldfield Chamber of Commerce Talks Accounting webinar. It's great to have three really strong speakers we have from the community of Sutton Coldfield. We have Jackie Hendley, who's a business and tax advisor, works on a number of boards and non-exec roles, 20 years a partner with a large accounting firm in Birmingham, and is also on our Sutton Coldfield Chamber Executive Committee, and also represents Sutton Coldfield on the Chamber main Chamber Council in Greater Birmingham. We also have Sian Kelly from Inform Accounting, business owner of a 18 employee strong accountancy firm that's been based in Sutton Coldfield for 10 years, and also Joanna Drinkwater, MD of McKnight, another chartered accountants firm based in Sutton, formerly of PwC, and also on the committee of Birmingham West Midlands Institute of Chartered Accountants. So three really fantastic speakers. It's great to see some familiar faces and some not so familiar names and faces on the chat. So and on the delegate list. So welcome all. The sort of the run through today, we'll be working and listening to Jackie, then Sian, then Joanna on various areas around accounting, really giving you and your business advice around really what to do coming out of lockdown and their sort of thoughts and advice around the current COVID-19 situation and how accounting obviously plays a massively important role in your business running well. From the Chamber point of view, these are a series of webinars that we've continued to run through the course of lockdown. It's been a real good opportunity to be able to share such good advice and strong advice from so many local firms. From a Sutton point of view, it's been great to shine a light on those businesses that we all think so much of in Sutton Coldfield. In terms of, as I mentioned on the chat, if you've got any questions, please do add those in the question mark tab for the Q&A following the three presentations. Engage with us, ask us questions, and we'll certainly help that discussion following the presentation. So first and foremost, a big welcome to Jackie Hendley. Jackie, over to you, and we'll get started on the webinar. Thank you.
Thanks very much, Chris. Can you hear me? So Chris has asked me whether I will talk about cash forecasting and coming out of lockdown. It's an interesting discussion to have, and I've been advising a lot of companies over the last few months. The first slide just gives a bit more detail on the roles that I've been doing, which are quite relevant because you can see the range of experience that I've had with clients. As Chris said, I'm a non-exec director for a number of businesses, but including the NHS Trust, which gives me an insight as to what's happening there, but also retailers and translation companies as well, and a executive search company. So that means that I'm seeing what's happening in those companies. But equally, I've been advising people on business and tax advice, and I'll come on to some of the things I've done later on. So looking at, I need to work out how to move the slides on. Looking at the areas for the businesses have been considering, I suppose the starting point was to look at what we've seen so far. So when businesses entered lockdown, the businesses had been trading as normal. So the balance sheets included a lot of cash and debtors, and the companies also had their stock, which they'd collated pre-COVID. We then saw the government issue a lot of funding, which was via some of the CBILS loans and the government cash that was available. So the CBILS loans and the bounce back loans enabled companies to access further cash. I know there was some difficulties to start off with the availability, but my understanding is that there's a lot more availability of those loans now, albeit that normal loans are becoming more difficult because the banks have used a lot of their funds through the CBILS and bounce back loans. So going to new banks and obtaining completely new funding may be difficult as we come out of lockdown. Companies also had a lot of cash that was available through the furlough through grants, through rate holidays, through VAT deferments, etc. So there's been quite a lot of cash in the system over the last few months. But my caution is to be aware that there's a false sense of security. As we come out of lockdown, businesses are going to be struggling for cash because they've not had the trading for the last few months. Some of the supply chains are more difficult. So what is immensely important is that we understand and regularly assess our business plans, our budgets and our forecasts. And I've worked with a number of businesses to help them to look at their forecasts, either to get funding from the banks or just to make sure that they can survive through the future. And also to look at some of their contracts to make sure that the contracts with their customers stand with the issues that have come up through COVID, because it has caused some contracts to be null and void. So to have a look at that. And also to consider what their business is, because they may have been, they may need to diversify, and a lot of businesses diversify to help with PPE and other things. And some of those have decided that actually some of the diversification is something they want to do going forward, or they may have downsized and they've identified deficiencies. So there's a need to constantly look at business plans, budgets and forecasts as the world changes. Another word of caution is to watch out for credit insurance. I've come across a number of organisations that have struggled with credit insurance, with the fees going up significantly and the cover reducing significantly. I know the government have got involved in that to put pressure on the insurance companies to provide that insurance and also to provide a support line. So watch out for that if that's something that you need. Review your debtors and your contracts. So the debtors that have been there for a while, are those companies viable? Are they trading as well as they were before? Do they have the cash to be able to pay you? And it's something that you need to watch. We've all seen in the press how many companies have gone into administration. There's a lot of good news out there. I've heard a lot of manufacturers say that they've had more orders coming in than they expected, but just watch the debtors and make sure that cash is going to come in on a regular basis. And if you have concerns, then take advice at that point. And as I said before, look at the contracts to make sure that they're still applicable. And then unfortunately, coming on to another point that I think we all need to consider is contingency planning. So what happens if there's a second wave or there's a local lockdown? So we've all seen what's happened in Leicester, where there's been a lockdown and stores and shops which were opening have had to close again. But also what happens in your own organisation if you have a COVID case. So I think if there's one case, you don't have to shut down, but if there's more than one case, you have to report it to the health authorities, and there may be an assessment undertaken. So one of the areas of advice that you can look at to plan for that is to put your employees within a bubble. So you have different bubbles who work together, so that if there is a case, not everybody has to self-isolate, and that protects your business for the future. So just be aware of that, keep an eye on it, and think about how you would continue to operate if you had an outbreak at your premises, or if there was an outbreak in your area, and are there ways that you can mitigate that. And then returning to work. For some of the companies I've been working with, I've written return to work policies and also work from home policies. If you're making work from home, if your employees are working from home, it is still your requirement to undertake a risk assessment for them, and to ensure you've got the right policies in place, that they have the right furniture, they have the right equipment, but also that they adhere to GDPR and other things such as that. And if they return to work, how are you making the workplace safe? Again, written policies on that and policies as to what you need to do. And beware of director and officer liability insurance. That is increasing significantly because of health and safety, because of COVID, because of people working from home and the impacts of that. So just think about that and consult your insurers on a regular basis and early enough to make sure that you've got the right policy in place. Another thing to think about on working from home is if your employees have been working with you for 26 weeks, they have the right to request flexible working. If they've been working at home during COVID, it may be difficult for you to refuse that flexible working on the basis that they've proved it can work. So just be aware of that. Think about the legalities of it. But overall, I sense that there is a lot more buoyancy in the market now. Businesses are coming back and they're seeing their orders come back. I suppose what I'm trying to say here is just consider when we entered lockdown, the cash was there. People have had the cash dry up over the last 3 months. So now is the time to go forward and think about what could happen over the next few months if that cash isn't available. Just to give some examples of advice that I've provided to businesses, I've covered some of these, but I've written and reviewed business plans and strategies. I've prepared budgets and forecasts for clients, worked with clients to help them to obtain CBILS loans and other loans, undertaken group restrictions as companies have sat back and said, well, actually, the way we want to do business has changed. So help them through that process. Written working from home, back to work policies, and also policies regarding face coverings, and advising on how to come out of the crisis better than you went in. That is, to me, is a very important aspect of using the crisis for your benefit. What efficiencies have you made? What things have you learned which you don't want to have the same issues coming up in the future? How can you be a better business going out than you were going in? So those are just some of the things that I've covered. Sorry it's a bit rushed, but there's 3 speakers and there's a lot to get through. So thank you for your time, and I will now hand over to the next speaker.
Yes, thanks, Jackie. Appreciate that. Yeah, some good points made there. Certainly around that sense of security and the really the sort of the forecasting side of things. That was a real key area that I know you wanted to speak about. So we'll come back onto that on the Q&A side. And I think a really good point again is that how to come out of the crisis better than when you went in. I think is a really key point to understand. So thank you very much, Jackie. Appreciated. We'll bring you back in for the Q&A a little later. So that leaves me to bring on Sian from Inform Accounting. Sian, I know you did a lot of work around sort of outsourcing and the digital side of accounting. So I shall pass over to you, and thank you.
Thanks, Chris. Okay, just get the slides up. Okay, so a little bit about me first of all. Sorry, frog in my throat. Should have brought some water in, shouldn't I? I'm a chartered management accountant. I founded Inform Accounting back in 2010. My background is I worked for Next and trained with them. Then I was at Marston's Brewery. Well, it was actually Wolverhampton and Dudley's, and we did the acquisition of Marston's and Manfield breweries while I worked there. And then I worked at Compass Group before I went on to found this business. I set it up as a cloud accounting practice right from the off, and we specialise in providing business advisory, compliance, bookkeeping, and forecasting services to small businesses. We're basically a fully outsourced finance department who works with our clients throughout the year. So that's a bit about me. Let's move on. That's it. Got it. Can move the slides. Okay, so I'm going to talk a little bit today about what cloud accounting actually is and how it's been an advantage during COVID. Cloud computing basically means storing and accessing data and programs over the internet, and cloud accounting is the use of that functionality in a nutshell. The traditional approach to accounting was very much clients would have a box of files or a bag of files. The data would get processed possibly onto Sage in an office somewhere, and at year end your accountant would have a backup of your Sage and produce some stat accounts and tax returns, or receive the boxes off you and process those. You've got disadvantages there, especially for businesses who operate like that. When COVID struck and everyone had to go home, they had no access to any of their financial data at all and were really left out on a bit of a limb. And it would have been quite difficult to look at the forecasting work and things that Jackie mentioned. It's not a proactive way of doing accounts. We've been using the cloud for 10 years now, and it's all very much about looking forwards. Doing forecasting and actually having real-time information and offering advice to clients in depth on numbers that we can share on screens. So just show a little bit about the way we do things. So there's 3 elements to the cloud approach. you've got your inputs of your data. So we use Receipt Bank a lot. Now, that is an application where you can either photograph or send all your invoices directly into Receipt Bank's portal. The data's processed in there and then pushed through into Xero, which is the cloud accounting system, or some people may use QuickBooks Online, or I think the Sage one is another sort of similar application. We tend to focus on Xero. Also, Amazon data, Shopify data for e-commerce type businesses can feed in. You've got applications for taking direct debits. We manage all our client fees via an application called Go Cardless, and we have a lot of our clients using that. And you've also got bank feeds, which feed regularly into the accounting software, and they're a direct feed taken away. They're having to have bank statements on the desk and matching everything off line by line. So it really does sort of automate the workflow for the client and the processing, and you don't need someone there keying in a load of data. So Xero really is sort of your processing hub that actually does the churning of the accounting data. It has really good controls and security. It's a subscription-based product. All the online products are. So you can try them for a couple of months, and if you don't like them, you've not lost a lot. Another thing, very green product, environmentally friendly. We have a paperless office here. The only reason we have paper is if we do have someone brings in a box style set of accounts for us to do, but we process that through Receipt Bank and Xero in the background in that case. It makes collaboration with your team easy. It's been a real godsend for us during COVID. I think we shut up on something like March the 15th, I can't remember, middle of March, and we were all working from home the next day, just as business as usual, and we've done exactly that since, and I'm actually back in the office for the first time today, so that you can't hear all the building work going on at home whilst I do this webinar. So it really has been a godsend for us being cloud-based. And we've been able to collaborate with our clients using Google Hangouts and Zoom webinars all the time. It gives you continuity of support for exactly that reason, and you can use it anywhere, anytime. We have a lot of clients across the UK because of the fact that we can do everything remotely, and I quite often work from abroad when we're on holiday and stuff because we can. So it's not tying you down to that office space. And in terms of outputs, there's some real benefits to having the cloud style accounting approach. There's a lot of reports and add-on applications. There's a whole ecosystem of add-on applications that you can get information out the back of. A couple of them mentioned on here, which lend themselves to KPI reporting, cash flows and forecasting, Fluidly and Fathom. We've actually done a webinar with a client this morning where we've gone through their cash flow forecasting Fluidly and looked at their Fathom reporting pack, which allowed us to look at their KPIs and stats that they've got and start working on a budget for them for the next financial year. So the beauty is you really do have real-time information at your fingertips by using these systems, which can help you make informed decisions about your business. Just move on to next slide. Okay. So the cloud in COVID, I've talked about this a little bit, but it really has been an opportunity, business as usual for us with the clients. They've needed us more than ever right now with furlough queries and taking out CBILS loans, and just sort of general advice on what to do. Many businesses have been forced to embrace change and use technology, and they've taken to that really well. Hopefully businesses haven't had a real problem with desktop software and traditional sort of office-based software, but use of bank feeds and integrations I've covered, and the cash flow apps, so you can closely monitor cash flow, and the banks have wanted cash flows off clients. So we really have been able to support on that and help with loan applications and make sure that all the data and past sets of accounts and things people have needed for CBILS have been available and there without having to come into the office. Okay. And last slide really is just sort of following on from what Jackie said and the importance of cash flow forecasting. couldn't put a really sort of clear slide of this on here to show people, but this is a snapshot from an application which we actually gave to all of our clients for free and have continued to do so at the moment. It's an application called Fluidly that does 12-month cash flow forecasting for clients. Now, it takes all your data out of Xero or QuickBooks or the cloud application you're using if it's got a link, and does a projection forwards based on history. Now, that projection on sales, depending on your business, may not be accurate. We've found with our client base, we've got two types of things going on. Our e-commerce businesses are absolutely flying and wanting more support offers because they need help with the growth they're getting during this period. Or you might have businesses that are slightly in decline, but you can go in and sort of update the sales figures in here. You can plot in the deferred VAT payment. A lot of businesses have taken out the 50k business bounce back loan. That can be plotted into the forecast and how clients want to spend it, and also plotting in the repayments. And you can put scenarios into this software. So what it gives is a really good, clear view of what the next 12 months will look like for a client. Because I think one of our big concerns at the moment is there's been a lot of money gone back into businesses with furloughing cash and all the loans, and businesses do need to really sort of focus on when the repayments for those things start going out. Actually, that cash in bank is going to decrease quite a bit. But hopefully that's given you a bit of an insight into sort of what cloud accounting is all about and how that can help you with your business. Thank you.
Yes, Sean, I appreciate that. And again, I think there's some themes we can pick up on. I'm sure there's some questions from the delegates on the call. I know there was a couple of ones that I saw on that as well. So no, very much appreciated. Thank you. The cloud and the technological way of working is certainly sped up incredibly quickly, hasn't it, in the last 3 to 4 months? And I think I'm sure we'll certainly come on to that as well. So thank you very much, Sean. Appreciate that. Wonderful. We have Joanna now. So Joanna, welcome. Thank you for joining us.
Hello, everybody.
Good to hear from you. It works for Grant McKnight, a relatively sort of new accountancy practice in Sutton Coldfield. So I will pass on to Joanna to talk about the furlough scheme, and then we'll bring both Jackie and Sian back on for questions afterwards. So Joanna, over to you. Thank you.
Thanks very much, Chris. Good afternoon, everybody. My name is Jo Drinkwater, and I'm the Managing Director of Grant McKnight. Grant McKnight are chartered accountants, tax consultants, and business advisors, catering for all businesses and organisations, regardless of size or geographical location. So, based in our Sutton Coldfield Mere Green office, I oversee a range of services, from doing accounts and tax returns for sole traders and SMEs, to providing consultancy and financial director services for the likes of the West Midlands Pension Fund and Goodyear Dunlop. Very similar to Jackie and Sian, throughout lockdown, our team have all been extremely busy working from home, and part of our service to our clients has been to provide furlough assistance to those clients running payroll and furloughing employees. So today, I'm going to run through the changes to the furlough scheme. Let me just make sure I can click on the next slide. Can you see the next slide? There we go. So I'm going to run through making a claim. So I'll be touching on changes to making a claim, looking at changes to eligibility and the actual claims process itself. I'll run through some key dates for the scheme, which as employers you should be aware of. I'll also be touching on contribution changes required by both the government and employers. I'll run through the new flexible furlough scheme, which launched this month, and I'll also touch on the job retention bonus. So you'll all have a chance to ask any furlough questions at the end of our presentations in the Q&A session. Making a claim. So the main changes to the coronavirus job retention scheme from the 1st of July include employee eligibility. So employers can now claim for employees on a fixed term contract, employees working reduced hours for any amount of time, and also staff who are new parents can also be included in the scheme. Now, employers can also claim the grant for employees on sick leave or holiday pay. But it's important to note that in all cases, you are only allowed to furlough staff so long as you have previously submitted a furlough claim for at least 3 consecutive weeks between the 1st of March and the 30th of June. Now, in terms of making a claim, there's also a new large claim template form to use if you're an employer furloughing more than 100 employees at a time. And another feature that HMRC have introduced to their online service, which means that you are able to delete any claims submitted within 72 hours. So any amendments required to forms can be submitted within 72 hours. Key dates. So from the 1st of July is when flexible furloughing begins, which I'll touch on later. The 31st of July is the final date to submit any claims for staff furloughed before the 30th of June. So the end of this month is a really important key date for any employers wishing to furlough staff before the 30th of June. Now, from the 1st of August, employers will be responsible for paying national insurance and pension contributions for all furloughed employees. Then from the 1st of September, employers will be required to contribute 10% of furloughed wages, plus the associated national insurance and pension contributions. Then employer contributions will increase further from the 1st of October to 20% of furloughed wages, plus the associated NI and pension costs. Which leads me nicely into contributions. So I've laid out the contribution changes in tabular format so that you can easily see how much employers are required to contribute each month. So as you can see from the bottom row in the table, the purpose of the scheme is to ensure that employees receive 80% of their wages throughout, capped up to £2,500 a month. So the costs associated with the employer's contributions of 10 and 20% for September and October respectively equate to an employer wage contribution of up to £312.50 for September and £625 for October, and that's per furloughed employee. The flexible furlough. So from the 1st of July, employers now have the flexibility to bring previously furloughed employees back to work part-time with any hours and any shift patterns to suit the needs of the business. So what this means is that employers will pay staff wages for the time that they're in work, and then you can apply for the scheme grant to cover any of their normal hours that they're still furloughed for. But I have to note that employers should be aware that significant changes have been made to the way that the claim periods are calculated. So from the 1st of July, employers will not be able to submit claims that cross calendar months, and all claims for periods up to the 30th of June must be submitted by the 31st of July. The jobs retention bonus. So announced last week in the Chancellor's speech is the new jobs retention bonus scheme. This means that employers will receive a £1,000 bonus for each employee who is successfully brought back from furlough. So to be eligible for this bonus, staff must be continuously employed from November through to the end of January, and they must be paid at least £520 a month on average, which is the equivalent of the lower earnings limit in national insurance. So that's £1,000 per employee if you bring them back from furlough and successfully pay them the lower earnings limit of national insurance from November to January. So just to recap, I know I've gone through things very quickly, but to recap on the latest changes, there are now further eligibility requirements, which gives employers further flexibility to furlough more staff, such as staff on fixed-term contracts or new parents returning from maternity or paternity leave. Contribution amounts required from employers over the next few months are changing, and the scheme will be closing on the 31st of October. So over the next few months, you have the flexibility to furlough staff based on days, even hours, and the job retention bonus will assist employees being brought back from furlough until at least next January. So I'll now pass you over back to Chris.
Thank you very much, Joanna. That's great. No, thank you. I'm as a more of a writing words person than a numbers person. Seeing those sort of pie charts and those in clear view is good for the layman's amongst us. But no, some really great advice there from all three presenters, and we'll start the Q&A now. So I've got the first question from Katie. If I could just ask Jackie, Joanna, and Sian to get on their cameras back on and they're onto the screen, that's great. Wonderful, thank you all. So yeah, we'll start with Casey's question first. Casey, obviously our Sutton Chamber president. So to qualify for the 1,000 bonus, do staff need to be brought back completely from furlough, or can they still be on a flexible scheme? We'll probably send that to Joanna first and foremost.
Okay, so in terms of the 1K bonus, the months that staff need to be brought back from furlough, the government are looking at November to January. So as the furlough scheme will be ending at the end of October, there will no longer be the flexibility to have staff furloughed. Does that make sense and answer your question, Katie?
Yeah, thanks, Joe. Yeah, so they have to be back in full-time employment for that period of time until January, when you get the bonus back. Okay, great stuff. Thank you very much. Perfect. We've got some good questions coming in now, so that's great. Yes, Phil, so if we ask that to probably Jackie, if I could, are there any restrictions on what the bounce back loan can be used for? You mentioned the CBILS and the bounce back loan, so Jackie, I just want to give your thoughts on that question from Phil.
Okay, thank you. Can you all hear me?
Certainly can.
Okay, so with the CBILS loan, and I think the bounce back loan is the same. When you apply for the loan, the bank looks at whether you've had an impact in your business as a result of coronavirus, and they're looking at you to use it for to basically get you through that period. It is possible to use it for some capital investments as well, if that's something that you need to do to keep your business going. But unfortunately, it depends on what the individual banks are looking for. They're looking at your forecast and how they play out.
Okay. No, thanks, Jackie. That's good. So, okay, no, appreciate that. Thanks for that. And I think it's I think anecdotally, there's certainly been the bounce back loans have been good for business. Have you seen that from your side? And you mentioned obviously the sort of false sense of security. Going back on what you said about the forecasting, I suppose that's a really important thing for businesses to think about, is that they've got the money, but they need that, then they have that security. But how long will it go, I think, is the key.
I think with that, Chris, as well, if companies have taken the VAT deferral, they don't have to pay it until the end of the year, then they've got the cash from that. But at some point, they're going to have to find that cash. Equally, with any of the loans that they've had, there's no repayments at the moment, but they will have to repay those. So the time to repay them is going to come at the time when some companies will not be able to pay their debts. It's just watching out for that, which is why looking at your forecast is absolutely critical at the moment.
And you mentioned those debtors list and that sort of that managing that what you're owed and knowing where that comes in. And I know that's been a vital thing a number of businesses have mentioned to me. So I suppose again, as you say, managing that process and knowing that.
There's another question that's just come up, which says, how long does it take for the bounce back
Yes.
to be approved? When I've done CBILS loans, that it took 3 or 4 weeks, but actually the timing now is significantly quicker because the banks are aware of what they're doing. To get them done quickly, the best thing to do is to have a business plan that you can just take to the bank and say, this is my business plan, this is why I need it, and it can be done within 2 days then. But it is down to the bank and down to the quality of what you're asking for and the information that's given.
Yeah, great advice, Jackie. No, that's a very good point. No, thank you for that. I just wanted to bring in Bineksh's question to Sian as well. So, Sian, I'm a Xero user. Xero's inbuilt business snapshot and short-term cash flow tools we never use. How useful are they, and are they similar to dedicated apps such as the ones that you mentioned?
They're useful, or they wouldn't be there. So they are useful to have, but they're sort of light touch solutions. And with the add-on apps, you will get way more depth. Like the short-term cash flow in Xero, I think only runs for about 3 months, and it's missing certain elements because it's quite a new development that they've put in. It's only been in there for a few months so far. Whereas these cash flow apps that I'm talking about, some of them can do you full 3-year projections. In the case of Fluidly, it's doing a full 12-month forward-looking projection for you. And I think it's really important not just to be looking 3 months ahead. Around the conversation we've just been having with Jackie, actually, the VAT isn't due till next March. Some businesses will have a court tax bill to pay. The loan repayments are going to kick in later in the year. And you really do need to be looking 12 months ahead to get a good idea of your cash flow. So yes, business has got tools there. Xero's got tools there that will help you in the short term, but I really think the add-on apps add an awful lot more to it. And the business snapshot in Xero is really, really good. It depends on the size of your business. It'll give you a few key stats. But again, if you need that more in-depth management information, solutions such as Fathom and Futurely do much more off the back of the data in Xero for you. And just a little point on the CBILS and stuff as well. Jackie, I think Funding Circle are approved for CBILS now, and they will refinance existing loans. Somebody called me about that last week. And if you are struggling with the banks, there's alternative providers like Funding Circle and iWalker that are approved for CBILS now, and will look at it. So there's other options out there as well.
That's great. No, thanks, John. Thank you. Now, I suppose I wanted to pick up that and get your thoughts on that forecasting that you mentioned. That graph was, 12 months ahead. That's obviously so important, as just Jackie mentioned, and Joanna touched on with the whole furlough sort of situation. How easy or hard, or what your experiences of businesses been able to, to sort of plan those sales and that income stream? That must be the most tricky thing. But I suppose if you've got the other information and you're clear on that certainly helps.
It is, but the software gives you the ability to do scenarios as well. So when you're not sure, you can kind of do your worst case, your best case, and varying what ifs. If the unfortunate position is you need to work out whether you can afford a member of staff, you can model it without that staff member in there. There's lots of different things you can do with it, and the software really is very flexible. It's also quite intuitive to use once you've got it set up. Mm-hmm. It does depend on the individuals who are using it, but we've got some clients who've literally we ran like an hour's training webinar, and they're often using it. Like the call I had this morning before I came on this is a client who literally watched the Fluidly webinar. I set it up with him for a couple of hours the first time he used it, and he told me this morning they're now going in it twice a week, keeping it up to date, using it as a rolling forecast tool, and he absolutely loves it. And we've got a couple of other stories like that. Flip side of the coin, we've got the people who aren't as confident with technology, where they've either not taken it on board, and I really think they need to, and we're going to try and work on sort of getting in touch with those people over the next few months where we can see they're not using it as much. We've got some clients who do have a regular monthly meeting with us, and we do it with them. So it's down to how tech savvy you are, and if you are quite tech savvy and you are on these cloud applications, these sort of tools are worth having a look at for over the next 12 months. They're useful.
Yeah, absolutely. Okay, no, thanks, Sian. Appreciate that. So another question coming in there from Katie and from Phil around the sort of support for business owners and the self-employed. So perhaps if I bring Joanna on around the self-employed grant, is that something that you've sort of come across with some of your clients, and also then Jackie as well? So yeah, Joanna, what's your thoughts on that?
Yeah, so in terms of the self-employed grant, the cut-off has actually passed now for the first grant. So the last date to apply for the first self-employed grant was the 13th of July. So where there's concerns about clawback, it's important to note that there aren't any specific conditions attached to the first self-employed grant other than your business was affected by COVID-19. Now, the fact we had lockdown throughout kind of March to June kind of, backs most self-employed business owners, to be honest with you. So the main concern that I'm advising to my self-employed clients is the eligibility of actually claiming the second self-employed grant, because obviously we've had businesses reopen, life is coming back to some form of normality. So in terms of the second self-employment grant, HMRC have actually said that they will use the 14th of July, yesterday's date, as the benchmark to determine if your business has been adversely affected by COVID. Then as of yesterday's date, then you are eligible to claim the self-employed grant. So in terms of any clawbacks, to answer your question, Katie, there hasn't been anything announced as yet, but as long as people have been claiming the self-employed grant who have been actually eligible for it, then that is the main point, really.
Thanks, Joanna. And Jackie, yes, your thoughts? I must say, I have a number of friends who are self-employed who are into that second phase of applying, and yeah, I suppose a painter and decorator of mine is now working 5 days a week, and he's still thinking of claiming that grant. And I suppose that's the challenge from that side, Jackie.
Yeah, and the point is that the government are looking to, and HMRC are looking to challenge anybody who's claiming when they shouldn't, similar to what we've seen with some of the textile companies in Leicester. So if the businesses are carrying on working all the way through, their income is there, then they will challenge somebody who's claimed it. So what they're looking for is fraud. If you haven't conducted fraud, then they're quite happy to repay it. So it's more a check on that. Looking at the question from Phil, which is for the owners, I am aware that there's a lot of company owners who pay themselves via dividends. And there's been a lot of lobbying of the government. We've lobbied through the Chamber, through the IOD, to organisations that I'm part of, to ask the government to actually fund that. But what they're saying is that they've done a lot of other funding, and they can't do everything for everybody. And it's an area where in the past, I think the government have been they were talking about bringing in IR35, which was to stop people doing exactly that, which is not paying themselves a salary, but paying themselves a dividend. And therefore, I think they're reluctant to do anything to cover the dividend payments. Mm-hmm. So I think you are correct that the support that you will get is via the bounce back loans, the CBILS and the grants, as opposed to money you've got through dividend income, unfortunately.
Yeah, it's a hugely tricky situation, isn't it? And one that, we as a chamber, and you as I'm sure on Chamber Council and through the IOD has heard a huge amount about. And it's certainly a tricky situation, I suppose. As Phil, I'm sure, has and will continue to do, is to speak to your accountant sort of contacts and see where those other grants could potentially help that very tough situation for a number of businesses. So no, thank you both for that. So just looking at another question from Binesh. We're a newly launched limited company specialising in intellectual property. No PAYE salaries were paid until April. We've successfully applied for a bounce back loan. Apart from that, can you confirm that no grant support are available? Who wants to take that one? Is Jackie potentially, and then we'll finish up with Joanna and with Sian as well.
My understanding is that you are correct that there is nothing available, because what the revenue are looking, that they're trying to stop fraud, and there's a lot of not a lot of businesses. I used to work in tax investigations when I was at KPMG. That was part of my role, but there's a lot of companies and individuals who declare their income to the revenue, and they put the cash in their pockets. And those are the ones that are, I'm not saying that that's you by any means, but those are the ones that are losing out at the moment, because the revenue are paying based on you having so the self-employed bit is based on you having declared the income before. Well, those people who haven't declared it before can't have it. And for new companies to say, well, we've just launched and we've got nothing as a comparator, to put it bluntly, anybody could go and do that. So therefore, what they're doing is they're saying, as far as I'm aware at the moment, they're not supporting people unless they were in business before that. But they're saying they will support them via the loans. So if you've got your bounce back loan, I think that's as far as you will get. The only other areas that you may get is rate relief or those type of things. If you qualify for those, I don't know enough about your business on that to know whether you do.
Okay, thanks, Jackie. That's great. And I'm conscious of the time, so I'm sure. Just wanted to bring in sort of Sian to finish, and then Joanna. So Sian, obviously some great questions and some good engagement there. I suppose coming back to your presentation to finish, you mentioned about using those apps and using those forecasts. We were saying before how quickly sort of the world has changed from a technological point of view. Do you think that's now for the better, and businesses who have been forced to use those sort of more technological applications, I think in the long run will help business and the economy in general?
Absolutely. I mean, I've been an advocate of using the cloud for 10 years now, and I've seen it go from me having to shoehorn clients onto the products and try and do a sales role to us growing organically because people wanted the products. And I think what COVID has done is just sort of probably cement that for some who moved on to it recently or who were thinking about it. And I had quite a few clients when it first happened, and we were mailing out, coming back to me saying, bet you're glad you're set up as a cloud practice now, aren't you? So, yeah, and I do think, that it helps businesses, it does businesses, yeah. So,
absolutely.
Yes.
Thanks, Sian. Good answer. Thank you. And finally, Joanna, obviously, you talked about the furlough sort of scheme and that process. Again, when we were talking about this webinar, we thought, and we sort of discussed as a group, that sort of final furlough sort of discussion was the key one to end on. So just to end on that, give us your sort of final thoughts around the furlough and perhaps how other areas of that support will help business moving forward, and how important it is that they take advice on that as well.
Absolutely. So the furlough scheme, I just want to start by saying it's been an absolute lifeline for a lot of our clients who operate payroll that haven't been able to trade during lockdown. So, you cannot fault the government. They've brought this scheme in fairly quickly, well, quicker than they planned to. And it really has helped businesses cash flow and also employment figures and employment rates for staff who may have been worried. So the key things that I want people to take away if they are using the furlough scheme is to just make sure that when you are putting your claims through, you are using the HMRC calculator to calculate the amount of claim, and you are double checking the claims. If you're submitting them yourself or you're getting your accountant to submit them, it is imperative that the figures you're submitting and claiming for are correct, because as Jackie touched on earlier, HMRC are looking at fraud, which does include furlough fraud. So businesses that may have claimed incorrectly, there's the employer's allowance to take into consideration. So I'd just like to end on a high to just say how brilliant the flexibility in the furlough scheme as well has meant for employers, especially if they're taking on staff and they need people to come back in for the odd hours and days.
Brilliant. Okay, Joanna, thank you so much. Jackie, thank you, and also Sian, thank you all. It's been a really engaging sort of 50 minutes. What I would say to any of our delegates that are present, there is this will be recorded for posterity onto our YouTube channel, so you can watch back and cover some of the presentations. They will be sort of shared across those people who registered as well. From me, a huge thank you to everyone who was on the call. Thank you to our three presenters. Thank you to Jess, who's in the background, telling me to stop moving my head around so my sound doesn't come in and out, and generally making sure we're all being well behaved and working our cameras correctly. So thanks again to Jess, a huge appreciation for that. And yeah, if you've got any other questions, any other thoughts, please either do get in contact with myself or with Joanna, with Sian, or with Jackie. Again, it's been a pleasure speaking to you all. Thank you for all your support for the Sutton Coldfield Chamber, and we'll see you all again soon. Thank you.